Good evening, everyone. This is Chart Sniper again with the weekend review, and this review of markets and indices will be very quick, and it will be for the next week, 20th to September 24th. So just a couple of important information on the last weekend that was a quad witching weekend. What it means is the futures, quarterly options, and monthly options and weekly options expire. So there will be a lot of volume index rebalancing will be happening, and it's very prudent that at the quarter end there might be a sell-off, right? So that's what we saw typically. And let's go and look at ES, which is S&P um, mini futures, and let's go and see what happened in the last quarter. So this was June quarter expiration, quad witching. So the market pulled back for about few days into that, and then it bounced very quickly. Um, Before that, in March, this was March, and it showed some bounce and then it fizzled out, right? So you can't take anything for granted, but if history repeats itself, typically that's what it does. So far, looks like the market has been holding the 50 days average, which is the purple line, consistently whenever it pulls back below that. Okay, so there was a pullback down and very decent bounce, pull back down, very decent bounce in that. So currently it is at the same level. While there is no guarantee of it bouncing, let's go and see how bad it is situation wise. Okay. So the first things first, it has to regain um, the 50 period average, which is a must. So tomorrow it will try to check back at that from below, and it may or may not be able to succeed in regaining that 50 days average. Okay, so that would be important to see how it behaves. That the Ichimoku cloud on daily, um, like last time when it pulled back, it was the support, but there is a little bit more down move possible here. So we're also looking at the price is supported by a lower Bollinger Band on daily. Okay, so that's where it says. So there needs to be. I mean, it's better to wait and see what market decides. So on the weekly, we are looking at a bounce to 443, and then checking if it can regain these 8 and 5 moving averages or not would be very beneficial for us to do before we jump to the long side. Okay, 4430 on weekly, and here we are looking at same thing 4431, which is ends up being 50 weeks average. So 4430 ish will be very critical for ES. Overall, we have to wait and see what direction it picks when it does retest of 50 average on ES. Okay, so volume wise, it has been a very high volume sell off on daily compared to previous sell-off that happened, and also the intensity of the sell-off was also slow, gradual, and intense. So it feels like some characteristic change that's happening in the overall underlying market. So um, if it regains back, then we are looking at least a bounce back to the middle Bollinger Band before we kind of conclude any negativity. Okay, and let's go and look at Nasdaq. Nasdaq is a little bit stronger. Okay, so it has been consolidating a little bit. The Bollinger Bands are coming closer, and on a daily basis, it doesn't look like there is no specific support, but on a weekly basis, it is holding the 5 and 8 moving averages and trying to get back about the 5 week moving average, which will be very nice for Nasdaq. So there will be some waiting game. To determine overall direction of the market, but the intensity of this bounce and how quickly it can gain back the daily moving averages would be very interesting to see in the upcoming week. Okay, so let's go and see how the Dow Jones is looking. This is probably the worst of all the four when compared to small cap and stuff. It is a more than needed pullback um, below 100 days average, and there is not much support here. Maybe there will be 34 average there, but looking at a bounce hopefully at the cloud bottom, and then hopefully this joins the market bounce overall. So nothing much to say here other than, we have to wait and watch. Overall, things doesn't look good. The first crossover already happened, and the 8 and 5 weeks average moved are trying to move below 20 average, which did not happen before. So far, all the 5 and 8 stayed far away from 20, but now they're coming very close to that. So that's not encouraging as such in Dow Jones stocks. The last one that we do from India's perspective will be Russell. So he's chugging along. It's been in that range, very long consolidation that's happening horizontally. Daily supported by cloud, but future is not looking that great. Still, it is supported by 50 average, but the average is pointing down. So overall, all the indices are kind of drooping over, and that could be something that money managers want retail traders to think that it's drooping over, or it could be actually drooping over for further upside downside move. Okay, so it's not looking that great. So this is a clear down move and some bear flag formation, and it can go down also. Same thing with ES until unless the cloud supports. Yeah, we have to really see how the cloud how it behaves there. Okay, so I'm primarily playing a waiting game here seasonally. Uh, the couple of weeks after expiration, September expiration, are not that great for the market, and this kind of pullback is good for overall continued upside move into the year end or the last quarter. So it's better to patiently wait and see until what price they'll take it down. Certainly, I know if you were directionally bullish in the last couple of weeks, it would have been some pain. Um, but this down move was into the September expiration was kind of something in a lot of people's mind. And let's not get into a um, trap by committing to this bounce run quickly. Let's play wait and watch. It will save us a lot of time. That's only for swing traders. For day traders and scalpers, you should be good. Actually, that is better in these kind of market situations. Okay, so let's quickly look at the SKEW overall. It has been pretty high. It's coming down a little bit down, which is good, but still it's elevated above 153, 149-ish. So I would like to see it go below 145 to re-establish the bullishness in the market. So far, the fear is still there. And now let's move quickly to cryptos and see how they're doing. Bitcoin, as such, is holding above 5x average. That's pretty decent. So you might see a lot of things here. Let me clear it a little bit. Time axis, futures. So what we are looking at here in Bitcoin is still a lot. So let's focus on weekly here. That's kind of clean, right? So let's do that. So we were kind of stuck at the 61.8 retracement, which is for now acting as a resistance. But as long as it holds above that week 5 weeks average, this is still bullish, constructive. It did a quick dip and then it's trying to kind of gain above that. So maybe another test of this 61.8 retracement will be good. Overall, it's exactly at 50% retracement of this entire down move. What it means is it's at a neutral zone, right? So it's not bullish and stuff. There is some more consolidation that's about to come. Yeah, so hang on if you are in a bullish um, in Bitcoins and stuff. So let's see how Ethereum is doing. Ethereum is also kind of except this breakout to higher, which was very relatively strong when compared to the Bitcoin. Bitcoin will never broke out the 61.8 retracement, but Ethereum did. But all that bullishness and relative strength was neutralized here, and now it's kind of staying below that. So as long as it's consolidating near these levels, it's pretty healthy, which means it increases the chance of it breaking out higher further. So looks so far constructive, and let's see here. Yeah, it's just lost the 5 weeks average, and we have to see whether it hold 8 weeks average. But these things move quickly. But it's good to see that they're consolidating near the 61.8 for some more time before the breakout happens. So that's pretty much it. Let's look at VIX quickly. VIX spikes usually after September expiration. So we could see it gained 50 weeks average. It has been closing above 50 weeks average for the last 2 weeks. So it's spiky. It wants to go higher. So be careful next 2 weeks. Take it easy. If you are in long-term positions, that should be okay. But if you are in short-term position, you better do not initiate new longs until you see the market clearly choosing directions. There will be a quick pop here, probably to this downtrend line. As you can see, there is downtrend line, and then it might fizzle out. So we would like to see it hit 100 weeks average and then fizzle out, which will be good for the market also. So some more pullback is what I'm expecting. Be cautious and stick to quick scalps and day trading until we find a well-defined direction in the market. With that, thank you very much for checking in this video. I hope that was helpful. See you next week. Thanks.